Well, hey there, everyone. Hello, hello, hello. Hope everybody is having a fabulous day. Super excited for our Tip Tuesday today. I know it's not Tuesday, we're a day late this week, but I still wanted to get here to talk to you about this very, very important topic because this is a question that comes up a lot in my community. But before we dive in, I'd love to know who's here. I always love to know who's here watching us live. So if you are here watching us live, say hi in the comments. If you're watching this on the replay, still say hi. We may come back to say hi back to you. And let's go ahead and dive in to this really exciting topic that I know everybody's going to appreciate because this is a big one. And this is all about how much should you save, spend, and pay yourself in your business. I get asked this question so much. Like, I'm finally starting to make some money. What do I do with the money in my business? Where do I put it? How much do I need for taxes? How much should I be paying myself? What do I do? Seriously, this is like the number one most asked question that I get in my business. Oh, you're watching until your plane takes off. I love it. Okay. They do have Wi-Fi now on the plane sometimes, but it's not the most reliable. So you can come back and watch the replay when you get here. All right, so let's go ahead and dive in. What do I do with the money in my business? This is the question I get. Well, the answer is a little complicated, but before we dive into the answer, I want to talk about, well, what are even the buckets to be thinking about? And there are typically 5 buckets that most people think about. Now, you might have some others depending on your business, but these are the 5 main ones that we're going to talk about today, and they're the 5 main ones that most business owners should be thinking about. So the first one are your operating expenses. These are all of those expenses that you need to pay to keep your business running, like your cell phone and your internet and your website fees and your email and Facebook ads and other advertising things. All the expenses you pay for in your business, payroll, contractors, stuff like that. Okay, operating expenses. For many of us, this is our biggest bucket, right? This is where the majority of the money in our business is going to go. So this is going to be a big one, and we'll talk about that in a second, like how much should it actually be. Another bucket is emergency savings. And I don't even love the word emergency because I think sometimes it's okay to just have a savings account for savings, for something you might want to do in the future. But it is a good idea to have a bucket for savings so that you've got some cash set aside in case something comes up, emergency or not, that you need to pay for in your business. The third bucket are taxes. Now, depending on your tax structure, I'm not going to get into all that today, but depending on your tax structure, this might be set up a little bit different. And depending on your tax situation, the rates are going to be all over the place. I always get this question, how much should I set aside for taxes? And the frustrating part is I usually can't tell you because I don't know your tax situation. I don't know what your filing status is. I don't know what state you file in or what state you have to pay taxes in. I don't know if you've got other forms of income. So I don't know what your tax rates are going to be. It's a lot of variables, but regardless, you're going to want a bucket for taxes. And we'll talk a little bit about how you figure out how much you should actually set aside in that bucket. You'll also want a bucket for owner's pay. Now, this bucket doesn't necessarily have to be different from your operating expense. So I'm not necessarily saying you have to set up a separate account for your owner's pay, but you've got to be thinking about the fact that there's an amount you need to pay yourself in the business. If you are in an S Corp or a corporation and you are on payroll of the business, then this is probably just going to be an operating expense because you're going to pay yourself on payroll when you pay your other employees. If you are not an S Corp, if you are, an LLC or sole proprietor, and you're not on payroll, so you're just paying yourself literally via like a distribution or a transfer every so often, then maybe you are setting up a separate account to do that. Totally up to you. We'll talk about that a little bit. So it's not necessarily a separate account, but it is kind of a separate number you need to be thinking about in your head and making sure that you've got the money to pay because it's really important that you pay yourself. Otherwise, the business isn't going to work for you because you're not making any money. The last bucket is what I call like profit or investment. Now, again, I'm not necessarily saying this has to be a separate account. We'll talk about that in a second. But profit or investment is the profit of the business. And the reason I put the word investment in there is sometimes with profit, we're going to just take the profit and maybe we distribute it to the owners or we distribute it in a profit sharing plan to our employees, some combination of that. Depending on where your business is, what stage your business is at. But in other cases, we might be taking those profits to invest back in the business. So if your business is in a growth phase You may be taking those profits to invest back into building out your team, or to invest back into building out your website, or to invest back into, purchasing more inventory or building out a retail space, or whatever it may be. So your profit can have a variety of uses. And so it's not always just going to be distributed to your people. And that's why I call it profit/investment. Okay. Hold on. I got to take this off for 1 second. So those are generally the 5 buckets. And again, I want to stress that just because I'm calling them separate buckets does not mean you need a separate bank account for them. We're going to talk about that in a few minutes, but these are absolutely the 5 buckets I want you to be thinking about. Now, I went too far. So the question of, remember our question, what do I do with the money in my business? The answer is you won't know until you create a budget. And I know that this is a really frustrating piece of this because people are like, just tell me what percentage. And there are a lot of people out there who will tell you percentages. And most of the time, I'm super uncomfortable with that because, again, they don't know your situation. They don't know what's going on in your business. And I think what happens too often when we hear those percentages is we take them as gospel. And we think, okay, great, so-and-so said that, I'm going to do that. And we don't take the time to reflect on if that really makes sense for our business. This is why I like building out a budget. Now, I know having a budget isn't always a fun thing, but I want you to rethink what having a budget means. In this case, in the case of a business budget, the budget is less about having a document that tells us how we have to spend our money and, making us feel inadequate if we don't spend it in that way. And instead, a budget is really a roadmap that gives us that plan for how we're going to hit the financial goals in our business. And as I've often said before, if you've been here for a while, the road, when you're going somewhere, there's usually many ways to get there. Okay. You're going to print out your directions that say go this way. But if you decide not to go that way, you can go another way. And that's exactly what our budget is. So the budget is that roadmap telling us, hey, here's one way you can get to your goals. But if we decide that way isn't quite working for us, there will be another way and we can follow that way instead. So the budget isn't something that you have to follow, or if you don't follow it, you've screwed up, or you must do it this way. The budget is really just mapping out one of the ways in which we can get to the goals that we've set for ourselves, okay? And that's why it's so important to do a budget, because we can't know how to allocate or divvy up the money in our business until we actually do that budget. And the other thing I will say is the budget is a working document. So even when I create budgets with my clients, we don't lock them in place forever and ever and ever and not touch them. We're continuously looking at them throughout the year to make sure that the budget still makes sense for what's happened in our business. Last year, 2020, with the pandemic, everybody's budget changed because everybody's plans changed. It didn't mean that we had failed or that we had to give up. It just meant we had to go back to our budgets and say, okay, the way we thought we were going to go to get to those financial goals isn't the way we're going to be able to go anymore. There are some serious roadblocks, right? So how can we get there instead? What's another way we can get there? And then we had to figure that out. So let's talk about what goes into a good business budget. And I will give you, if anyone's watching this and wants a business budget template, I don't have a link for it because I don't think we have a link specifically set up for it. But if you're watching and you want a business budget template, just drop a note below and just say like budget or budget template, and I'll reply to your comment and we'll get a link figured out and I'll reply to your comment with a link so you can grab it, because I do have a business budget template that you all can use. But what goes into a good business budget? Well, first and foremost, a realistic expectation of revenues. And I'm not saying realistic here to mean you should dampen or like tamper down your dreams. By no means am I saying that. When I say realistic, I mean, instead of just throwing numbers on the budget and hoping that they happen, I mean actually thinking through what you can do, what your team can do. So if you say, oh, I'm going to sell 40 spots into my done for you services. Well, do you have enough physical time on your calendar to do the work for 40 spots? This comes up a lot in my business because I do done for you tax prep. I could sit here and say I'm going to sell 1,000 tax prep spots for the next tax year, but I would never be able to satisfy all of those because my team isn't big enough to make those spots work. So you've got to actually sit there and look at what do you have? It's what do you personally have? What does your team have? What about your other resources? If you create physical products, you need to think about what are the resources you have available to create those products and what's the cap on that. So thinking about what is realistic Again, not playing it small. I still want you to dream big, but thinking about what is realistic given what you have or what you can acquire, what resources you have. I also want you to do a conservative estimate of your expenses. And I say conservative because most people overspend. Most people spend more than they think they're going to spend. And so we want to think about, okay, well, what are our regular expenses? But let's build in some wiggle room to those too, because things come up, right? So doing a conservative estimate of your expenses will give you enough of a buffer so that when that stuff does come up, you've got that wiggle room and you're not finding yourself trying to rework your budget because you ended up spending more than you planned on. Along that note, buffering, I just made a word, buffering for overages or contingencies. And I do this on both the revenue side and on the expense side. So on the expense side, I do it by building in more into my budget for like miscellaneous, or even my budgets for advertising. I might add a 10% buffer on top of that. My budgets for my contractors, I might add a little bit of a buffer for that. So you can do it on the expense side, but you can also do it on the revenue side too. So, and what I mean by that is, if I want to, I'll set my revenue goals kind of high, but I might actually do them earlier in the year than later in the year. So I'm giving myself some room so that if I don't hit those goals earlier in the year, I've still got some months to make up for it, right? Like I'm not putting it all into one big launch in December and then spending 11 months prepping for that launch, and then the launch happens and I didn't make my numbers, and now I'm like, shit, what do I do, right? So I'm planning ahead, I'm budgeting in those contingencies. And then, of course, what goes into a really good business budget is owner's pay. Whether you're on payroll or not, you need to make sure you're factoring in the money that you need to pay yourself. Because if you're not paying yourself in your business, what are you doing, right? Now, it's one thing if you're at the very beginning stage of your business. Not everybody always gets paid right at the very beginning. That's part of starting up a business. But you absolutely should be putting this into your budget, and it should not be the last thing you think about. When I sit down with my clients to do a good business budget, first and foremost, we don't start with what they've been spending. We start from scratch and we look at what an ideal budget would be, and then we reconcile the two. We sort of find that middle ground that we can live with right now, and we work towards getting to that ideal budget. But the thing we always start with is making sure that the owners get paid. Making sure owners get paid, then making sure the team gets paid, then everything else. So you need to be putting in a line item for that, making sure that it's a priority, because if you're not getting paid in your business, then you're not going to stick with your business. It's going to feel stressful. You're not going to have the energy to put into growing it. Okay, so these are the elements of a good business budget. And again, if you're watching and you want access to my business budget template, just put budget below. I will reply. We'll get a link set up. I'll reply and you can get access to that. It's in my business money library, I'm almost positive, but in case it's not, we'll get you a link. Okay, so I also want to see you building contributions to the 4 buckets in your budget. And I actually said 4, but it's really 5. But the reason I said 4 is because profit or investment is kind of what's left over. Now, I always hesitate to say it that way because you shouldn't think about it that way. When you set up your budget, you shouldn't sit there and add in all your items and then whatever's left over is your profit. You should build your budget with the profit in mind. So you should decide what you want your profit to be, much like you're going to decide what you want your owner's pay to be. You're going to decide what you want your profit to be and then fill in the empty space with operating expenses and savings and things like that. But when you're building your budget, you want to build in contributions to these 4 buckets in your budget. So you want to make sure that these are a part of that budget as well. And this is really important because if you don't do this, then all of that money is going to get spent on operating expenses and you're not going to have anything left over for taxes or savings or your profit and investment account or your owner's pay. So you want to make sure you're building that into your budget as well. And when you're doing this budget, you're going to see at the top, okay, $10,000 in revenues, and then you're going to have all of your different expenses, right? And you're going to see if you're bringing in enough every month to cover all of these items. And spoiler alert, you kind of need to. Now, again, if you're at the beginning and you're not quite there yet, okay, maybe you're going to work your way up. But that's another thing I want to mention here too, is when you're crafting your budget, I want you to really be thinking about, okay, if my goal is to save 10% of my revenues every month in my emergency savings account, maybe I can't do that this first month. Maybe I'm just not there yet. I'm still trying to get everything figured out. I'm still building up my revenues. I'm still weaning down some expenses I don't need. But can I build that into the last month of my budget? And can I increase that savings contribution every single month? Maybe I'm starting at 1%, and then it's 2%, and then 3%, and then 4%, and then 5%, until I hit that 10% mark at the end of the year. So work your way up. If you can't get there today, that's okay. Work your way up. Again, though, the question, how much should each contribution to owner's pay, or to profit investment, or to taxes, or to your savings account be? And again, the frustrating answer is it depends. It depends on your current financial situation. So if the business is currently really, currently making a profit every month and doing pretty well and has a lot of cash flow, then maybe you can kind of fully fund or do a nice chunk to things like owner's pay, to things like your savings account, to your profit investment account. If you're just starting out and cash is really tight and you don't have a lot of revenues coming in, then you may find that you can't put as much in those buckets as you'd like to. And again, that's going back to what I just said about the savings account as my example. Start small and work your way up. Set whatever you want to be your goal and see if you can even just do a little bit. What's really important, I think, is that you at least try to do a little bit to all of these buckets every single month, even if it's like $1. In fact, when I have folks come to me and they're not paying themselves, and we look at the current situation and it's very clear that they can't just start paying themselves, the very first thing I do is I actually do have them start paying themselves, even if it's $1 a month, even if it's $10 a month, whatever they can do. I have them start doing that to develop that habit so that they get into that habit every single month of paying themselves, and then we work on increasing that number. Okay, so that's the first thing. Financial projections. What do you expect is going to happen with the business? How is the business going to grow? And as it grows, how can you put more into each of these buckets? What's your tax situation? I touched on this before, but what's your filing status? What is your, do you have other income? If you have other income, that raises your effective tax rate, your marginal tax rate, which is the tax rate on the next dollar of income you make. Sorry, I have to adjust. And so that's going to affect how much you need to set aside for taxes. So it's not as simple as me saying this number or that number. You've really got to understand your tax situation. If you don't know, talk to your tax preparer, your accountant. If you don't have one, go look at your return and see what your most returns, even ones that get printed through like H&R Block or TurboTax, will show you what your effective tax rate is. You can look at where your income is. We have a progressive tax rate system in the US here, where as income goes up, the tax rate on that additional income goes up. So look and see, okay, if I make, what is my next dollar going to be taxed at? And then that's what I should be setting money aside for. And don't forget about state as well. You've got federal and state tax rates you need to think about. And then what are your short and long-term goals? If you are, I mentioned this at the beginning, but if you are very much in like growing and building your business, you probably want to set aside more money for investment back into the business than you do maybe for owner's pay or for savings. If you are really trying to build up an emergency savings fund because maybe you're going to take some maternity leave, or maybe you're just worried about not having a cushion for the business, then you want to put more into that, and maybe you'll put less into that profit investment account. So it really does depend. Okay. Now, given that said, I am going to give you some percentages, and I hate this because I know what's going to happen is y'all are going to see these and you're gonna be like, that's what I'm going to do. But I'm only going to give these to you if you promise that you will build your budget and that you will use these. Sorry, my allergies are killing me today. That you will use these as a starting point, and then going back to all these different factors, change these and adjust these as needed for your specific business and your specific situation. Okay. So if you're just starting out, here's what I like to see. I like to see owner's pay being 40 to 50%. Now, this isn't always possible, but if you're just starting out, usually you don't have a team yet. Usually you might have some bigger startup expenses, but for most of the folks in my community who are running service-based businesses, online businesses, your operating expenses are usually a little bit lower. If you're a product-based business, this is going to be different because you're going to have higher inventory and capital costs. But for the rest of us, if you're just starting out, you should be able to come close to this. Owners pay 40 to 50% of what you bring in. Operating expenses, 30%. Again, those of us running digital or service-based businesses, those op expenses should be pretty low. You probably don't have a team yet. that you have to worry about paying. Savings, 5%. Let's try to aim for 5% just to get something in the account so that you've got a buffer in case you need it. And then taxes, 15 to 25%. Again, yours could be higher, yours could be lower. It's such a range, and it really does depend on your specific situation. So please check that, okay? If you've been in business for a few years, and if you've hit 6 figures, then those numbers can shift a little bit. This is probably the point where you're starting to think about building out a team. So now your operating expenses are probably going to go up a bit, 30 to 40%, maybe even 50% if you're really building out that team. Your owner's pay is going to come down because remember, your revenues have gone up now. So I'm not suggesting that you're going to take home less, but the percentage of your revenues can be less, 30 to 35%. Still put that savings at 5%. Let's get something in there. Profit or investment, 10%. We want to make sure we've got some money that you can put back into the business as you're growing the business. And then taxes, 15 to 25%. Again, very much dependent on your specific situation. If you're making over 500K, so the business is really starting to cook, you're probably really building up your team now because you're probably getting a ton of folks in, clients in and sales in, and you really need that support. Owner's pay may go down to 20% at this point. Again, you may still be making you'll still be making more money than you were take home before, but the percentage of your revenues is coming down. So I know I put 20% here, but I would say 20 to 25%. Operating expenses probably now going up because again, you're building the team, you're paying for a lot more. So 40 to 50%, savings 5%, profit investment 10%. And by the way, if you're at this level, I would say I would almost flip them if you're not focused as much on growing. If you've kind of got a good operation that's running really smoothly and you've built out the team and you've built out the systems and your website's great and all that stuff's good, then you might actually flip them and put 10% into savings and 5% into that profit investment account, because right now you don't have a lot on the pipeline that you're going to need to invest back into. And so you can really build up that savings account. And then taxes, 15 to 25%. Again, this may change. And in fact, at this level, you may find that your tax rate is actually higher, 30, 35, maybe even 40%. So you may find you need to do more. It really just depends on your specific situation. Okay. So again, I want you to check that. But before I go to the next thing, but I want you to go back and remember, these are your 5 buckets, no matter where you're at in your business. No matter what your revenues are, I want you to be building these 5 buckets into your budget. Now, some of this may feel a little bit like profit first for some people. And some of you may just be wondering about profit first. So for those who don't know, Profit First is a book and a methodology about essentially how to allocate the money in your business. Now, I get asked a lot, how do I feel about Profit First? And my answer is, it's okay. I don't love it. It's not a system that I am going to strongly teach because I think it's a flawed system. That said, I think it has some benefits. So if you're watching and you do Profit First, or you're watching and you're thinking about Profit First, I'm not suggesting that you can't keep listening if you love Profit First. What's important to understand about Profit First is that it is one system, which means that for some people, it's going to be incredible. For other people, it's not going to work, and that's okay. If you've done Profit First, let me get to my slides here. If you've done Profit First, and it hasn't worked for you, it doesn't mean you're a loser. It doesn't mean you failed. It might just mean that it's the wrong system for you. And if you've done Profit First and you love it, great. I have nothing against that, and I'm glad that it worked for you. I do not believe that it is the answer to everyone's prayers. I also am hesitant, even for the people it's worked for, I am hesitant about it for a couple of reasons. I'm going to talk about those. So I want to go into, let's talk about the pros. So first of all, the pros of Profit First are it focuses on making sure you get paid. So the way Profit First works is it essentially says you should allocate your money between these multiple buckets, which are very close to the 5 buckets I've said with a couple of exceptions. However, it doesn't just look at buckets. It actually says you should open bank accounts for each of those buckets. Okay, so you should have like a separate bank account for each bucket. And it goes a little further to say that you should actually have some of those bank accounts be at different banks. And you have like clearing accounts at your current bank where you put the money in the clearing account and then you move it to the other bank. it can get a little complicated. But that's its system. But by allocating the money based on certain percentages, it makes sure that you actually get paid in your business. I like that. That's really good. It also does that because it focuses on profit first. It says that instead of thinking about the money in our business as revenues minus expenses equals profits, we should think about the money in our business as revenues minus profits equals expenses, meaning we focus on those profits first, and then whatever is left, we use for expenses. I think that makes sense. I think that's great. I love that as an idea or an ideal. The problem is that's not super realistic because most people find themselves in a position where that is just not possible. And there are businesses where that doesn't always feel possible. So I think profit first is a great ideal to work towards, but I don't necessarily think it's always going to work for everybody in the moment that they're at. But we're talking about pros. So pro, it focuses on getting you paid. It puts profit first, which I like. And it provides a system for allocating funds. And I think that's good because it is confusing to folks. Where should I put all the money? What about the cons? So first and foremost, I think one of the things that bothers me about it is it actually focuses too much on what's in your bank account versus the financial health of your business. And the funny thing is, the author of Profit First actually says that he believes Profit First helps people focus less on what's in their bank account because he talks about business owners as the only way that they pay attention to their numbers and focus on their numbers is they look at their bank account, see how much is in there, and then they go, okay, that's how much I can spend. And he's not wrong. That a lot of people do that. And he's suggesting that by having all of these different bank accounts, you're not going to do that as much anymore. Well, the problem is, in my opinion, as an accountant, that still doesn't give me the information I need. Because yes, I can move money over to my operating expense account, let's just say, but I don't know how much of that money is already spoken for merely by looking at my bank account. I don't know if I have recurring expenses every month that I've already committed to of $5,000. I'm not going to know that by looking in my bank account, right? I'm only going to know that by looking at my budget or looking at my accounting system. So Profit First focuses so much on these bank accounts and doesn't focus on the financial health of the company. The author also talks about how, people look, the thing that baffled me the most is he said, people look at their profit and loss statement or their balance sheet, and it doesn't really tell you anything. And I'm like, it tells you so much. Perhaps the problem isn't that it doesn't tell you anything, but that business owners just aren't taught how to read profit and loss statements or balance sheets, which is true. Most business owners are not taught that unless you go to business school. By the way, I have a video on that in my membership at us Moneymakers, which we just did this month. That was our topic for this month's workshop. So perhaps the answer is we just need to teach business owners how to read those statements because they're actually really helpful and they tell you a lot about what's going on in your business and the financial health of your business, none of which you can understand from looking at just what's in your bank accounts, no matter how many bank accounts you have. The other issue I have with Profit First is it's overly complicated. It requires you to set up and manage many, many bank accounts. Now, there are some people I've talked to who've done Profit First, and they love this. This doesn't bother them at all. It helps them really get clear on where all the money is, and they totally love the system. And again, if that's you, great. I really, truly mean it. I have nothing against that. But I also have clients who that overwhelms them. It makes it much less likely that they will follow through on the system because it's just too complicated. So one of the cons that I don't love about it. So my answer is if what I've taught you today feels a little like Profit First, you're not wrong. It is. But I don't teach Profit First. What I teach is a way of thinking about the money in your business that is more malleable for each business owner, depending on what works for you, okay? So what does this all look like in practice? Like, how do we actually put this system of having these buckets and doing different percentages and building that into your budget? How do we put this all into practice? Here's what I recommend. And actually, this is not on this slide, but first and foremost, I'm not suggesting you have to get a separate bank account for all of these. So let me just come back here real fast. Let me go to my categories. Okay, so 5 categories, right? I do suggest that you have a separate bank account for your operating expenses. That's your main bank account not to harp on Profit First, but Profit First wants you to have an account where the money comes in and then your operating expenses are a different account. I do not recommend that at all. I do not think that's a good idea. I recommend having one account where your money comes in and you pay your operating expenses out of this account. And you also you can pay your owner's pay out of this account. I don't believe you need a separate account for owner's pay. So that's one account right there. It's your OPEX account, operating expenses. I do like having a separate account for your savings. This can be a savings account, like doesn't have to be a checking account, it can be a savings account, but I like having a separate account for your savings. And I like having a separate account for your tax savings. I think it's a good idea to have those separate. I like that. Now, if you have a bank like Novo, N-O-V-O, Bank Novo is a bank that I highly recommend. And in fact, I'll throw the link up here on the screen because I am an affiliate for them and I absolutely love them. But if you're looking for a free business bank account, definitely check out megkwheeler.com/Novo. If you are a Novo user, they have something called reserves, which allows you don't open up separate accounts, you got one account, but it allows you to have these reserves or envelopes where you can set money aside for different things. So if you're using something like Novo, I would have the main account is your operating expense account. Money comes in, money goes out for OPEX and owner's pay. I would then have a reserve for emergency savings and a reserve for your taxes. And I would put the different money amounts in there. Now, profit or investment is an interesting one. If you are going to save up for something, like a new website or building out your team or building out a retail space, then I might set up a separate account or a reserve for profit/investment. But if you are not, I don't think you need a separate account. This is where Profit First and I disagree, but I don't think you need that separate account. So bottom line is probably 3: OPEX, emergency savings, and taxes. And I think everything else you can just put in the OPEX account. All right. So let's go back. So I just wanted to point that out because I mentioned bank accounts and then I didn't put it on the slide. Okay, so what does this all look like in practice? Let me pull this Novo thing down. So what does this look like in practice? On a semi-monthly basis, so twice a month, which is how often I recommend you do money meetings. On a semi-monthly basis, I would, oh, Novo rejected you. I'm sorry to hear that. Send me, I'd like to learn more about that because I am a Novo affiliate and I want to also help you get a bank account. If you don't mind sending me a DM or emailing me at support@megkwheeler.com, I'll put it in the chat. I'd love to hear a little bit more about that if you don't mind. And I may be able to help you. So let's find out, depending on why you got rejected, let's find out. But anyway, so what does this look like in practice? So on a semi-monthly basis, when you do your money meetings, I want you to set aside the funds for each of the buckets based on your allocation percentages. So basically, you're going to, if you decided I'm going to do 10% to savings account on a semi-monthly basis, you're going to look at your profits or your revenues for the month, depending on, you're going to do a percentage of which one, and you're going to set those aside into those separate accounts or those reserves or whatever your practice is. On a quarterly basis, I want you to review each bucket and determine if your percentages should be adjusted. So maybe you've been doing 10% to your savings and now you've got a really nice amount in savings and you're like, you know what? I've got a year's worth of a year's worth of expenses saved up in savings. I don't think I need to keep doing this much to my savings account. I'm good. Then adjust it. You also can take that opportunity to distribute or spend the funds. So let's take taxes for a great example, as a good example. Maybe you've been putting 30% aside in your tax account and you've gone through a few quarters and you made your quarterly estimates and you do your quarterly review and you're like, you know, I keep having a lot of money left over in my tax account after I make my quarterly payments. I don't really need this money. Let me reduce my percentage from 30 to 25. But let me also distribute some of this extra money. Maybe I'm going to put some in savings. Maybe I'm going to pay myself with some of it. Maybe I'm going to reinvest some of it. So on a quarterly basis, I like doing that. And then annually, you're going to develop that budget that includes allocations for each of these budgets. And you're going to make sure, and by the way, we start our budgeting process in October because we like to give it some time to not only build it, but also make sure that all of the numbers in the budget feel right. So don't wait till December 28th to do your budget. You can, worst case, if you haven't done it sooner, you can, but ideally start that process earlier. But once a year, develop that budget and make sure it includes these allocations for each of the buckets. So, okay. All right, my friends. Oh, hold on. I can't advance my slides. A question I get a lot. What if I don't have enough cash to do this? I've already kind of touched on this a little bit. Nope, just kidding. We're not there yet. But I just want to reiterate this. If you don't have enough cash right now to start divvying up to these buckets, I want you to still do your budget, and I want you to set your goals in that budget. So again, if your goal is, let's say your goal is to pay yourself 30% of your revenues. Maybe you can't do that right now. Maybe you can only do 20%, but I want you to set that 30% in your budget for when you think you can feasibly do it and work your way up. So don't just wait until you can do the 30% to jump up. If you're at 20 today, try to do 21 next month, 22 the next month, 23, 24, 25, et cetera, et cetera. Keep building it up. That's what I want you to do. So even if you don't have enough cash to do this, I want you to do it, and I want you to start small. If all you can do is put $1 every month in your savings account, I don't care. Do it. Get in the habit of allocating money to that savings account, to owner's pay, to taxes, for all of those things, okay? Start small, that's okay, but make an effort to increase that amount every single time you do it until you hit that goal, even if you're only increasing by $1. Totally fine, but just get in the habit of doing it and then get in the habit of increasing. All right, that is all I've got for you. So, any questions? I know we've got a few folks watching live. I see some folks over here on YouTube, some folks in the Facebook group. So let me know. I'm going to stay on for just about 30 more seconds to see if there are questions. Otherwise, some exciting news. We we are currently in the process of re-releasing the Badass Moneymakers, which is my monthly membership group all about the money stuff in your business. We're just in the process right now of re-releasing it. We've completely updated everything. We've added a lot of really cool stuff. We're still going to have monthly money workshops on topics that are going to be really helpful for you in your business. We're now going to have 2 monthly, or I guess semi-monthly Q&As instead of just 1 a month to get all of your money questions answered. We're going to do money meeting sessions every month. So if you're not really sure how to look at the numbers in your business, you're going to love it. Come to those money meeting sessions, and I'm going to walk you through everything. Plus lots of other great content in there, and really lots of other great resources as well. So we have not officially opened the doors yet to Badass Moneymakers for new members, but we will be doing that in the next couple of weeks. So head on over to megkwheeler.com/action to get on the list. We always have something special for people who are on the list when we open up the doors. So you'll want to be on that list if you're not already. Okay, I want to take a question here. So what's the difference between owner's pay and putting yourself on payroll? It's a great question, and it's kind of I don't want to say complicated, but there's some pieces to it. So if you are a sole proprietor, if you are a single member LLC, or a multi-member LLC, if you are if you're a sole proprietor, if you're an LLC, if you are in a partnership, you can just pay yourself. You don't have to put yourself on payroll. You don't have to worry about payroll taxes. You are going to just physically take the money from your bank account, from your business bank account to your personal bank account via check, via transfer, whatever it is, and give yourself the money. Now, when you file your taxes as an individual, you are going to pay self-employment tax on whatever those amounts are. And in fact, the self-employment tax you pay isn't actually on the cash you get. It's on the profits of the business. You pay it on all the profits of the business. But it's very simple. You just transfer the money to yourself. If you are a corporation, or you are an S corporation, you made the election to be classified as an S corporation, you need to put yourself on payroll. Now, especially if you are an S corporation, you need to, because the benefit of being an S corporation is that you do not pay self-employment tax on profits over and above a reasonable compensation you pay yourself. So it's really important to put yourself on payroll for an amount. If you are an S corporation, you need to do that, because the amount that you pay yourself through payroll will be subject to payroll taxes. And then everything above that, all your profits above that won't be. So that's the difference. But if you are a sole proprietor or an LLC that is not an S corp or a partnership, you don't need to put yourself on payroll. Don't worry about doing that. It's just not necessary. Otherwise, if you're an S corp, you do. So hopefully that answered the question. I actually think I did a video a while back about this. So if you need more info, let me know and I can try to link it. But hopefully that answered that. So perfect. Got it. Cool. All right, friends, I'm going to leave it there. Just as a reminder, make sure you're on the wait list for when Badass Moneymakers opens up again. You can join by going to megkwheeler.com/action. And I will be back here. I think we're back here next week with another Tip Tuesday. We'll try to be here on Tuesday. Hope everyone has a great week. I will see you all then. Bye.